Hey, what's up guys? Omar here, broker and CEO of Alden Mortgage and Ome Realty. So this is going to be your mortgage rate update. On your mortgage rate update, we're also going to be talking about the total. This is the 6th straight month of total pending home sales that has just fallen. The increase in inventory as of right now, and the new San Diego no fault eviction. So as far as the mortgage rates go, mortgage rates have dropped again. We're going to be pricing out 5 different mortgaging products. It's going to be a 30-year fixed, a 15-year fixed, a 30-year FHA, a 30-year jumbo, and a 5/1 adjustable rate mortgage. And if you don't know what a 5/1 adjustable rate mortgage is by now, it is interest only for 5 years. Then it gets adjusted every single year according to the cap and the rate on your product. 30-year fixed currently is sitting at 5.25%. That is 0.02% better pricing than yesterday, 0.11% better pricing than 1 week ago, 0.03% better pricing than 1 month ago, and 2.18% increase in pricing from 1 year ago. 15-year fixed will be sitting at 4.72%. That is 0.01% better pricing than 1 day ago, 0.08% better pricing than 1 week ago, 0.01% increase in pricing from 1 month ago, and 2.19% increase in pricing from 1 year ago. 30-year FHA will be sitting at 4.65%. That is 0.05% better pricing than 1 day ago, 0.35% better pricing than 1 week ago, 0.23% increase or better pricing than 1 month ago, and 2.02% increase in pricing from 1 year ago. 30-year jumbo will be sitting at 4.60%. That is 0.07% better pricing than 1 day ago, 0.15% better pricing than 1 week ago, 0.1% increase in pricing from 1 month ago, and 1.49% increase from 1 year ago. 5/1 adjustable rate mortgage will be sitting at 4.42%. That is 0.04% better pricing than 1 day ago, 0.18% better pricing than 1 week ago, 0.22% increase in pricing from 1 month ago, and 2.17% increase in pricing from 1 year ago. Now, according to the National Association of Realtors, this is actually our 9th or 6th straight month of pending home sales that has fallen. This is not about homes that have been in contract, this is total closing. So the National Association of Realtors says this pending home sale index, your PHSI, in April represents a 6th consecutive monthly decline. The index based on signed contracts to purchase existing homes and slid 3.9% from March to a 99.3 reading. Both new and existing home sales also experienced significant drops during the month. Now, this is all based off of new mortgage rates. The mortgage rates have increased, so it decreases the total buying power. Less people are going into contract because, let's just face it, it is inevitable. You just can't afford the same amount that you could afford at a 2.5% versus the 5.25 that we are right now on a 30-year conventional. The PHSI, which is the pending home sales index, has now lowered than during the same period a year earlier for 11 consecutive months. Last month's index was at 9.1% below the April 2021 level. Now, the National Association of Realtors also coincides with the Mortgage Bankers Association that says that the payments on new mortgages by as much as $500 a month have increased. The Mortgage Bankers Association Thursday morning that the national median mortgage payment based on recent loan applications rose from 1,736 to 1,889%, which is 8.8% total increase, which, you know, it is just what it is. It's we can't really change it. Now, the total volume of listings and homes for sale have actually increased. So is it going to be more of an increase and is it going to kind of like teeter-totter? Well, the home listing suddenly jumped. It actually just jumped. The home supply has jumped 9% from last week compared to the same week 1 year ago, according to Realtor.com. The pending home sales, a measure of signed contracts on existing homes, they dropped actually nearly 4% in April, a month to month, and we were down over 9% from April 2021, according to the NAR. Now, to give you a better example of exactly why this is happening, in May of 2019, right? In May of 2019, this is before the whole pandemic and eviction moratorium and all of that. A buyer purchasing a home, like let's say for instance you bought a home for $300,000 with 20% down and a 30-year fixed mortgage, your average interest rate, let's just say for the sake of argument, would be 4.33%. The monthly payment and principal interest of that would be $1,192. In 2020, same parameters, right? But with a 5% home price increase, but the mortgage rate dropping down to $1,192 with a 3.41%, which would be, it would still, which is remarkably low. Like, even though the home price increased because the interest rates were low, it actually increased your buying power total. And then by 2021, the monthly payment was up only by $100. This month, with prices rising another 21%, the mortgage rate surged to around 5.5%, which was just not too long ago, about a month ago. The monthly payment would be at $1,991, almost $800 more a month than in 2019. So the buying power did decrease, and that's all based off of a $300,000 home, which is average. The total starter home price is around $300,000 for people trying to get into the market, especially for those relying on FHA guidelines. And FHA, it's in a seller's market. FHA and VA, they just get kicked out because there's so many people that are actually going higher on the total sale. Like, if your home sale price was $300,000, people are overbidding, and it's just getting a little bit too nuts out there. So people are actually just overbidding on homes, which then disqualifies you off of these low down payment assistance or loan down payment programs, whether it's a conventional or if it's an FHA 3%, 3.5%. Even if you're getting a down payment assistance and you go 100% financing, which we currently do have, link in the description below, that you still are not going to have enough money in reserves to go ahead and purchase that home. So we're kind of just, holding our breath to go ahead and see exactly how this is going to go ahead and play out, how this is actually going to work. This is going to create a real estate bubble. Is this really something that's not doing too good? Now, home prices have increased so dramatically that everybody's speculating like, yeah, it is going to be a housing bubble. Another factor is going to be the evictions, the mortgage moratorium, or the eviction moratoriums, forbearance and deferment on mortgages. In San Diego, there's something actually called a no-fault eviction ban. In San Diego, renters can breathe a sigh of relief, which this is just like, this is not good. This is terrible. This should not be the case in any type of market out there. Now, this new effect will actually go into effect on Sunday. Now, here are some of the parameters as far as the no-fault eviction ban, okay? So under the moratorium, if a landlord or family member wants to move into the unit, so let's say, for instance, you know what? Times are getting rough. You want to go ahead and you want to go back and move into the property, or let's say you have a grandmother, a mother, a father, a sister, brother, friend, or whoever it is that want to go ahead and move it. You have to go ahead and supply them with a 90-day notice to go ahead and move out. If you want to go ahead and move them out and you want to go ahead and re-rent the apartment, get this, okay? So you have to give them a 6-month notice in order for them to go ahead and get out. Now, this is just creating a bigger stir-up than what needs to be. San Diego has probably by far been the worst as far as eviction moratoriums, as far as bans off of, what landlords are able to do, which is kind of creating this really, really bad market in the investment side, because people are like, you know what, if I gotta go through all this headache just to go ahead and do all of this, and I can't evict people when I want, I can't renew, take a lease and just say, you know what, I'm not going to go ahead and sign a lease. Because one thing that happened during this whole entire pandemic is it put a really, really sour taste in landlords' mouth. Now, it's understandable. People who purchase homes and they're using it as a source of income. If I can't afford to go ahead and keep up on that property, and if you're not paying, it's just dollars and cents. You just really can't live. You can't go on like this. You can't hemorrhage money out. And it's like, oh, landlords make all this types of money. Let me give you a little insight of how it works. Majority of landlords, especially small ones, do not make that much money or as much money as you think that they do. They don't. The only way that we do is if we go ahead and flip a property, or if we're going to go ahead and hold on to it, but we have to go ahead and buy a property that is really like decrepit and delaminated and everything is all messed up. So we have to go ahead and rehab it, and then we have to do something and calculate something that's called an ARV, which is an after repair value. Then the after repair value, then we could go ahead and refinance and get our initial capital back, and then just keep doing it. But ultimately, you're not making money off of that monthly payment. You're doing it purely just to go ahead and build a portfolio. So eventually, after so many units, you could go ahead and do it, but you're not making money off of 1, 2, 3. You're probably clearing, let's say out of 20 units, and everybody's paying their mortgage payments, you're probably making somewhere in the neck of the woods of maybe $4,000 or $5,000 every single month off of your rentals. That's not that much money. That is really not that much money at all, especially if you that's after your costs, your associated costs, your running costs, your HOA fees, your mortgage, principal, interest. Especially in a seller's market right now, it's not that good. Well, that's going to be your mortgage rate update, and if you want to go ahead and stay up to date on what's new in real estate, just go ahead and like, subscribe, comment for up to 50% commission rebate, 0% listing, or any mortgaging assistance. Link in the description below. Until next video, guys, I really appreciate you watching. Peace.
Sky's beautiful and so are you. I wanna make it up to you, start something new. Yeah, I've been thinking of the parts I played for you. Now I'm drinking from the bottle as I do. It's like a long dream. You're on the wrong team. Oh, there's a lie and there's a fun coming out of me every time I see. Oh, there's a lie and there's a fun coming out of me every time I see. Oh, there's a lie and there's a fun coming out of me every time I see. Why's it destroyed? And why is I fighting hard to be the better part of me, the better part of me. Sugarcoat and reconcile, so I can do a dance and make us both forget, only to start it up and play it out again. Oh, there's a lie and there's a fun coming out of me every time I see. Oh, there's a lie and there's a fun coming out of me every time I see. Oh, there's a lie. Hard to be the better part of me. Oh, there's a lot.